Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market went from bad to horrible this week, as a confluence of events put fear into the hearts of investors. There's a big list of negatives that brought a deluge of selling, and on Thursday it really came in as the Dow fell 724 points and S&P 500 down around 70. It was a terrible market, and the best the market could do towards end of the week was slow the decline and get a little choppy here on Friday. Here is that long list of what did affect the stock market this week. It all started Monday when the news came out about the Facebook data breach. And there's been a huge uproar around that. We've got more to say about that when we look at the worst stocks for the week coming later in the show. Then Powell came out on Friday. He's, of course, the head of the Fed chairman, and he was more hawkish than people had expected, actually looking between now and 2019 is having as many as 6 rate hikes, and that really put fear into the heart of investors after they thought about it. Of course, we got a little blip to the upside first, which we always do, but that would put the Fed fund rate over the inflation rate, and that would be far less stimulus than we've had here during the Fed's great experiment that's been going on for these last 9 years. Then more about President Trump's cabinet as the shakeup continued in there, as the chief advisor, security advisor McMaster was out, and in is now a far more hawkish John Bolton, who really is a hardliner when it comes to Iran. So that has people being a bit more nervous. And then President Trump's lead lawyer resigned, the one that's there to help him with the Russia probe. So lots of shakeup going on there, but maybe that wasn't such a big deal, except for when you look at tariffs. That was really the big deal. They went from threat to reality as the president then signed a $50 billion tariff order that is, he says, not punitive, just to kind of recoup the money back. But China came back, and of course they talked about their retaliation with tariffs on 128 products. That included pork and wine out of California, nuts, and so it was only about $3 billion at that point. But then they hint at fighting back even harder and talk about U.S. treasuries and buying less or selling those off, and that could be painful if they decide to do that. So the combination of those things and the possible threat of economic slowdown based on that. People are looking back at Smoot-Hawley, of course, in 1930, and the Great Depression it was really a pretty negative effect to the economy when that occurred. That was much bigger than what we're talking about right now. And then Europe threatened a response, talking about a tech tax, and of course they import a lot of our technology. And then there was some relief in that area because the president then said he was going to delay the tariffs to Europe and 4 other countries out until May. Hopefully they could come out to some resolution before that. And then there are geopolitical issues in the news that pushed oil to the upside. There's Israel and Syria. Israel came out and said that they actually did bomb that Syrian reactor. It's the first time they admitted it, and they did that as a warning to Iran, who plainly, they say, will not get nukes. I'm with them. Never again. The Saudis and Iran, well, they're facing off, and the U.S. is putting together an arms deal to arm the Saudis, and there's more fear of war over there, and that's stimulating that oil price up. And then another big one, China this week finally is launching the petro yuan. The yuan. They say that might then take them away from using the petrodollar, which it's been decades and decades that we've seen oil always priced in dollars and traded in dollars, and that would be a pretty significant negative for the dollar. And if people stop doing deals in dollars and do it instead in a yuan, that is certainly the seeds for a dollar collapse. And the dollar is not acting very well in this environment that we see here. Let's take a look here as we switch over and look at our 60-minute chart of the S&P 500 and see what happened this week. And you can see it was a downslope week. The only big blip in there we see on the upside was for a few moments after that Fed news. Big down move here as the president, as the Facebook news came out, and then the president threatened the pharma companies over the opioid situation. S&P's down 53 and the NASDAQ down 200. That was just foreshadowing the troubles that we were going to see coming later in the week. You could see not a lot went over here on Tuesday. Oil did get a pop on that day. Here was the Fed day. There's that blip right after the Fed announcement where they raised rates 0.25%. Raised their growth outlook, actually, raised their employment outlook, which means that employment they expect to sink down to 3.6%. If that doesn't bring wage inflation, I don't know what will. And they raised their outlook for the number of rate hikes into 2019. Stocks pop and drop, and you could see for the day ending up not a huge change in there. Facebook got a rebound early in the day, and that helped the lift, but then it got really sold hard again, and especially here as Facebook resumed, and then there was this trade war saber rattling going on. Here's where the Trump lawyer resigned, and the market didn't like when that happened. And then here's where President agreed that he was going to put on 50 billion tariffs on China, and then the market got absolutely slammed. Friday's bringing a choppy day in here. The market was very choppy overnight also. Here we come entering into the final hour of the day. We got some stability overnight as the president did talk about delaying the tariffs to 5 countries. And then you can see the pop here because there was some threat that he was going to veto the spending bill. Which is a ridiculous spending bill, if you ask me. And then he decided he was going to sign it. He was holding back over the fact that there was nothing that dealt with the DACA issue, and also that there was no additional money for the wall. So he came in and finally agreed to sign it. The market got a big pop on the upside, and now here you could see selling off. There are sellers waiting in this market. If you don't believe it, you could see it right there as the market tries to rally, and every single time it picks up its head, the sellers plainly come back in. This is a very weak market environment. Stock market for the week, depending on what index you look at, down 4 to 5%. Pretty bad downside week. This is looking like it could be the worst March in 17 years. Bond market got really small gains. It was a very feeble bounce for the bond market in this type of environment. You would often think that there'd be a safety bid coming in. It didn't happen. The dollar, small losses for the week. The big down day was Wednesday on FOMC day. The dollar got hit really hard that day. And then the flight to safety bid started to come in, but in the gold market, as gold then did move up. It had a strong up move this week, $33. Silver is still a laggard. In fact, the only metal that is strong at all, really even in any significant way, is the gold market. Silver up only about 20 cents on the week. Oil surges $3 on the week, gets back up near the top of that range on all of these geopolitical risks that I have mentioned to you here. We have believed that the stock market was in a correction. And there's lots of excuses now when you look at the market and the background news why the market's pulled is pulling back. Of course, we have believed then that the market was in a correction that started a couple of months ago, and that it was going to continue into the springtime. You really should watch our big picture analysis. That video is up on YouTube right now, where we think that the market will decline sometime near the June time frame. The odds are really high based on our cycle analysis, which is so important in here, that the major patterns that we look at point to this corrective period coming in here, and now we get this market that continues to fail, and it is proving that longer term analysis that we looked at. The only question is, in my mind, not is it going to fall, and not so much about the timing when it'll fall, but the question is, how much is it going to fall? I'm very sure that 10-11% decline that we saw back a couple of months ago is going to be surpassed on the downside, and maybe by some significant amount. So like I say, plenty for investors to be nervous about, and I would say that now is the time to look for rallies that you can use to lighten up your positions. We're going to get with you in a moment looking at the best and worst for the week. I'm sure you've noticed my style of charting is different from most analysts. It's called cycle analysis, and I've been studying this style of analysis for 43 years. Now you can learn it. In fact, you can bring this into your own research. I have just finished recording our cycle analysis workshop. These are 20 video modules that are going to take you through a very great step-by-step process to learn this style of charting. You're going to learn how to take a very basic chart that looks, well, like this, and then take it with each of these steps to get it to look like this or this. This is an amazing difference and a ton of information that comes to you off of those charts as you learn to project forward in time and price. Not only are there 20 videos, but there's also over 20 videos that we attach from our video library that are supportive to these lessons. It's going to be a whole different way that you look at charts. In fact, you will never look at charts the same way as you do right now after you take this workshop. It's going to improve your entries and exits, it's going to raise your win-loss ratio, and it's going to greatly improve your odds of success as a trader or self-directed investor. Go to the front page of askSlim.com, go to the bottom of that page, you'll see a puzzle piece that says Cycle Analysis Workshop, and just click on that and register. You're only going to be able to do that till April 1st to get this 30% discount. After that, we're going to be at full price selling it there. So make sure you get on our waiting list, and once you sign up, then around April 1st, we're going to send you a special link to go to that page for you to get all the information about it and then sign up for that great price. It's a great investment, and it will make a huge difference in your career going forward. Thanks for listening. All right, best stocks for the week. There's not a lot to show you, actually. The biggest movers this week were in the silver market, actually. Silver stocks had the biggest gains. AU, PAAS, AG, they were all up 9%, and PAS up about 6%. So big solid gains in there, and I'm not in love with this group yet. That I'll show you. You could see in here that you get a 9% gain in AU. It doesn't mean all that much. Let's just look in this area right here, and you could see, well, there's an engulfing pattern right over there. The cyclical patterns that we look at suggest that there's still another month potentially to go before we enter into a positive period. So we're not just absolutely thrilled with what we see right over there, and we would say that look for maybe a test of that $9 level here in AU during this period. That engulfing pattern right there, what that means is that high $8 or $9 area is about the worst that you're going to see, and you could see that it got down in that level a couple times and has been holding there. We just don't think it's quite time yet, and based on the silver pattern that we're looking at, maybe not exactly the best time to be buying these stocks. So we're going to look for a further pullback. You can see in here in PAAS, this has got our colored phasing in it, which you just saw in that example of the cycle charts that we do also. And so it's in this longer term yellow zone. The rally comes at exactly the right time. Where does that mean? It means that, well, this is called the cyclic harmonic family, and it's made up of two minor cycles, and here's the first one right over here, and the second one calls for the rally right there. You could see that, and that would be, well, good timing. Again, we're looking for us to make a little bit more ground, then roll over one more time. This is actually the summertime when we think the best opportunity is for these stocks. So we're not in a hurry to buy them. Another group that did pretty well was the solar stocks this week, SPWR. SunPower is on our list of best for the year. And take a closer look in here. This stock looks to me like it really wants to go up. It's only 3 weeks into the advance in this green zone. That's a pretty short period of time. It says to me that, well, look at this one. This was like almost 3 months. This was over 3 months. This one was about 2.5 months, and this is just 3 weeks. So I believe that this green zone is going to get you more rallies up here and get into this resistance zone again over $9. It's trading now at about $7.90. So we would be a dip buyer in here in SunPower, up 8% on the week. They have asked for waivers on the tariffs, and that's why the stock got a pop, and they do look positive. The next one is CSIQ, which is Canadian Solar. This is a Canadian stock that builds a lot of stuff in China, and they're getting the benefit of the same thing that First Solar did, getting a pop in here. And this is a big spot. Notice where it is at the top of that resistance zone. Our projection is for it to roll over here and complete the correction. But if it gets through that resistance zone right over there, this could look very different. It actually could look more like this as it follows this cyclic pattern right over here. You can see how closely it follows them in here, that base built, the next cycle right in here, the next one right in here, and then the one we're in. So what this says is that, if it breaks through, you get a much longer rally and then a correction out over here into June, and then much better upside right over there. This is staying in that nice upward channel, which means that it's likely that the upward momentum is still in place. I should say it's actually the upward directional component, because momentum in this stock actually had been negative and now just turned up. That's the Hull moving average right over there. That's our momentum indicator that we use on our weekly charts. And on our daily charts, we use the slim ribbon as our momentum indicator. So that just had turned up. It's a key area. Let's see if this one can get a breakout in there. So like I said, the oil stocks have had a pretty good move on the upside in here this week. 3 of them I'm going to show you, and it's all in relation to the oil market getting this pop of $3 this week. First one we're going to look at is APC. That's Anadarko Petroleum. This is an example, when we look at this, before we get look at the chart, of one of the most positive patterns you can ever have looking at cycle analysis. And I'll show you a couple examples of that as you look here. Now, what makes this positive is that, and you will learn in the cycle workshop about the principle of summation. And what that essentially says is that this is the ideal cycles down over here. So in other words, if it went up half the time, down half the time, right? That's the perfect rhythms that you see. You can see that over here too, right? Perfect rhythmic motions that you can see in the market. And then what happens is that you take that, basic, and then you put in a directional component that's bullish, and you can see the uptrend right there, and then it resolves itself in that perfect cyclic action going up. It tells you that the odds are high that each of the rising zones is going to give you more rally. And you could see there that outstanding upturn at the perfect timing. And that points to getting up here around maybe 68 and a half, where that fib extension is over there. So this is the first week up of that cycle. And you could see that these have been rallying for a couple months at least on the upside. Well, one of them didn't, and that was this one, where the cycle turned up and then failed. and then broke underneath that low, and that set up this massive downtrend right in here. So the cycles speak a language that you're going to want to learn, and this one is saying that it is bullish, and I'd be buying dips here given the opportunity in APC. MRO, you can see this one has our colored phasing in it. It's actually just getting into this green zone over here, which only the first week we haven't added that in there, and we think it's going to get into this resistance zone above the 1675 level, as that's only the first week in that advance also. And the Marathon MPC, the first one we looked at was Anadarko, a natural gas stock. The second one we looked at was MRO, which is a integrated oil, and now we're looking at MPC, which is the spinoff from MRO, and this is Marathon Petroleum, the refiner. And you can see in here it is pretty fine for this refiner. That the patterns in here are, this is when you see a dotted line here like that, you know that we've done some work and have slightly altered our analysis. That's part of cycle analysis, where you're always looking for new information and then learning more off the new data. And you can see in here moving up, and it gets up and hit that fib extension zone right up over there. So it's probably got a little bit more time. We think that that area of 74.5 to about 76 is a resistance zone, and that's a spot where it's likely to stop. The drillers got some good gains too. NBR and RIG, Transocean, up about 6% on the week. But I'll tell you, based on looking at the patterns on the drillers, they're going to need a Mideast war in order to get these, and the prices spiking on the upside in order for them to continue in these patterns. I'm not really liking the patterns in the drilling stocks. That is the best stocks for the week, and I'm going to show you a lot more in the worst. All right, for the worst stocks of the week, we're going to jump into the steels. The steel stocks got massive rallies when they were when the news came out and investors were told that these tariffs were coming on steels, on imported steel. The only thing is that the president has softened them pretty significantly, and now with creating these delays to the Eurozone and a few other countries, that has got investors saying, holy cow, what did we do and who did we trust? And U.S. Steel is a great example of a failed pattern. Now again, we're always looking at cyclical patterns in there. The blue dashed line you see on the bottom, that is the cycle that tells you about the DBB, which is the base metals. It's a little bit off from, and we call that out of phase from the U.S. Steel pattern that you can see here. Now U.S. Steel is now in a yellow zone. That says that the rising phase, which is this one right here, has ended and is now in a declining phase, which comes all the way out here into May. So if it's in a declining phase and it declines out into May, that would mean 2 months of trouble, and that's this projection that you see right over here. The best case we can make here is it testing this, 31 area right over there. It's now trading at about 34 something, and so we could see that that would potentially be a good target. And if you get a bounce in here at some point, we think it is going to roll over and get hit again. So U.S. Steel down 12% on the week, as investors are really disappointed by the exemptions on the tariffs. So you can't please everybody, right? ATI, another one in that category, and you can see in here as it has rolled over, this has a little different pattern in it. This actually points to mid-April for this low to come and then to get a bounce. Key area here as it gets down to that 34-week moving average. Sometimes it gets below it by a little bit and then bounces. So it's got three or four more weeks potentially on the downside in there. That's down 10% on the week. And Nucor, another one, and this has colored phasing in it. Look at that breakdown. So you can see it gets back down to that 34-week moving average. This is a really bad pattern. What's bad about it is that this rally came where it was supposed to. You can see this decline right in here, so that's this cycle declining. The next rally comes, and because it's a bullish cycle, it's supposed to take out this high, Well, it couldn't quite get there. It rolls over in this gigantic downside week right there, and then tells us that it's in trouble. And the best case I can make is 59 on the stock. That's if it gets a rally and then comes back down. I could see it getting all the way down here to $55 or even worse. This is bad. And I would say that you get a bounce in here, you got to sell it. Because when you get the downturn in the yellow zone, then what happens is that rallies fail. You see what happened right in here, and you see what happened right in here as it actually turned red right over there and continued on the downside. So when you get into those zones is when the declining phases tell you that you got to sell rallies. Nucor in really, really bad shape when you look at that. One of the techs that got just decimated is Oracle. This stock, in my opinion, has turned pretty negative when you look at this pattern. And here, as it is now, again, we're looking at our colored phasing put in here, it turned into a red zone. What gets it into a red zone is when it gets below the previous cycle low. And when there's a lot of time to go, as there is here, again, pushing out till late May, then it says lots of trouble in here. Again, any rally in Oracle, I think it's a sale. We're looking for declines under $44, maybe all the way down here to $41 at that next support level between now and May. There's so many things that line up to May and June. I've been telling you that for weeks that we're going to get a decline that's going to take us into that period. You could see the selling coming in the market. Look at this stock, GIS. This is General Mills. Now, this has been a negative stock, and you can see the red arrows in there. They point to negatively configured cycle patterns. We have a whole chapter in our workshop on these patterns right over here and what they mean. Now, it's pretty unusual for a breakout to occur above a cycle peak and then for it to resolve itself by breaking that same cycle low. This is very unusual. And when you get that, generally this last sell-off over here is a capitulation on the downside. You can see the megaphone that's forming in here as you get this widening or broadening pattern. And the reason that broadening patterns make bottoms or make tops is because the sellers just run out of gas. Everybody gets sold out at the bottom of that last one. And look at the cycle pattern right over here, getting ready to turn up. That says to me, when you look at GIS, that this stock is ready to move. There's not a lot of stocks that I'm looking at right now that look like they're in important bottoming areas and maybe a good value, but there's maybe one of those for investors that just want to do something for the longer term, because we're looking at a bottoming forming in here, and this megaphone saying it's likely getting sold out. Their earnings were in line, but the revenues had missed, and the costs are going up, and their outlook was weak. All of that kitchen sink bad news is coming out right over here, and the stock got sold very, very hard. If you look here at our daily cycles, right over there, you'll note that, well, this is the period where the negative momentum came in the stock, and there's that earnings miss right over there and the poor outlook. And when you look right over here, this points to another week on the downside. So I would say that you're probably that the best opportunity if you want to buy this stock, because it's so sold on the downside and so likely to turn up based on cycle patterns, is in about a week. There's your weekly chart right over there. There's your daily chart right over there, and still negative momentum. So all you're going to ever do in something like that is nibble. Your weekly chart on the left, your daily chart on the right, and that's the look at what I think is getting close to a sold out stock. Next one we're going to look at is WDC, Western Digital. Note something on this chart that you see, like I'm sticking it out there and saying that looks like intermediate support and a buy zone. Now, that declining phase that we're in right there looks like it's got about 2 or 3 more weeks to go. This got sold off 10% with the techs. And this is a positive pattern. So, yeah, the stock market looks horrible, and it looks likely that there's a little bit more downtime to go. Put this one on your list. As long as it stays in above this area of 88, 5 points room that it has over these next few weeks, I think you're going to have a stock that is quite viable out there. So down 10% on the week, and a stock that I would put on the list as a buy. GameStop, GME, this is a great example of negatively configured cycles. Look at that perfect stair-step downward move. That is market geometry, a perfect picture of it. Now the question is, this stock is trading at $13.62 with projected earnings of $3 or more in these coming years. That puts the PE just over 4. That is either the biggest value trap I have ever seen, or it is the biggest buy that I have ever seen as far as the value goes. I think, looking at the cycle periods right in here, you can see that even in this downward trend, each of these rising phases right in here gave you a good pop in it. And you could see that's where we are right now, getting into that rising phase. If I were a speculator, which I have been all my life, I would say that, getting to a period to look for a bounce. How much were each of these bounces on the upside? Well, the stock is getting cheaper, but this one over here was from 25 to 32, so 7 points. This one from 20 to 27, 7 points. This one from roughly 20 to 25.5, so it's getting cheaper, so 5.5 points. This is a measly 20.5 to 22.40, so less than 2 points. And this one over here from, let's say, 16 to just over 20, so about 4.5 points. I think it's reasonable to expect this stock to pop from somewhere around 13.5 to something like, well, we'll call it 17 or even 18 on the upside. Notice that 34-week moving average that gave all this resistance coming down right over here. Well, that's coming down right now we'll call it right now it's over 18, but let's say 17. So everything points to this pop right in here, getting back to that 34-week moving average. And a horrible stock like this, GameStop, is an extremely cheap stock. And if you wanted to buy something that had some good value, if there's no shock in this company, then you're going to be able to buy a stock for relatively cheap, and I think for a relatively good pop. 13.5 to 17, 3.5 points. What does that come out to? 25% potential profit in maybe a 6-week period of time. That's a play I think you could make. Don't take that as a recommendation. We only share our analysis and education. Next thing we're going to look at is Twitter. It's a stock I've loved, and so many people wrote me and said they did so well on the stock. Well, I don't love it anymore. It's got problems, and the problems are definitely Facebook. Well, let's not look at Twitter yet, because Facebook set the trend. Here's a look at Facebook. We have been negative on Facebook, and I got to tell you, I was short the stock when it had that big break this week, so I was pretty happy about that. Take a look here as we look at the cyclical patterns, and I will tell you why I was bearish. Here is the nice, bullish, huge upside moves that we have had. So I'm just going to trace off the bottom cycles, and you could see how they resolve themselves. Super bullish right in here. You could see that. Super bullish right in here. All of these right-hand translations, they call them, where it goes up for most of the time. Then it rallies right over here and then breaks and gets below that low. It had a big rally, and the market rallied to, threaten the highs, and Facebook had trouble there right at that point. And when you get that happening, and then you get your next minor cycle rally, which is right here, then the next decline gets you to lower lows. It's a high probability. Our projections were to this fib confluence or this one here. We see the stock down at 155 or lower. This is about, again, out into May. So we've got about 6 weeks or more time right over here. I think every Facebook rally you sell, and I think that you will be richly rewarded because I think that you'll get little pieces of news out here that make the investors more happy. But the problem is that you're getting all of this delete Facebook sentiment and advertisers bolting, and this data breach problem they had really set a horrible tone, and it is greatly affecting Twitter also. Here's a picture of a perfect evening star top in Twitter on this weekly chart. That's a big top formation. We don't, if you were a student of cycle analysis, you would understand that there's a phase shift in here. What's happening is that we don't really know whether this was the key low or this was the key low. To us, that doesn't really matter. What matters is that either this is the pattern here where it rallied and failed and is going to decline through this whole period of time right over here, or it's going to make a low over here, but the major top is going to stop it, and then it will then turn down again. We just don't know how big the rally will be in here in either case, and I think if it does come, it's going to be a sale, and a high-quality sale at that. We've loved Twitter, now I hate it. And the last stock we're going to look at is, in the worst of the week, is Square. Square down about 3.5% for the week. Not all that much. When you look at this, maybe 4% now because it keeps ticking down. This is on my riskiest list for the year, which has been completely wrong so far because the crypto Bitcoin craze has affected this stock because of their plans to transact in cryptocurrencies. And, like I say, if that's the reason the stock's doing well and pushing it up to 100 plus PE, then that's going to bring some awful big disappointments to investors. When it had this pop, we said sell it, and now you can see that it's got this engulfing going on right over here. Well, I think best case in the near term, this is mid-April or late April that we're looking at right there, and that price there is about 49. This price over here is about 46. That's where I think it's going in this market decline we are right now. So it's having a bad day there in Square, down 6% right there. So cryptocurrencies, their adoption is coming a lot slower, and I think that this whole craze and the reason that Square went up is completely wrong, and that investors are going to be sadly disappointed by something that is such poor value when you look at that. 100 plus PE on this stock, I just don't think so. We're going to be right back as we look for the short-term view for the coming week. That was the worst. All right, now we're going to get into the short-term view for the coming week. A little reminder that if you want to get our charts on your thinkorswim platform, thinkorswim is our preferred platform, TDA our preferred broker, TD Ameritrade, and you can get those on your platform. Just become a level 4 askSlim member, and we send updates on these charts weekly to our members on the 80 best traded symbols that there are. You also get our level 3 rankings and trade setups, and our beautiful table on these 80 stocks that shows you the condition in 3 different time frames. You also get our option bias indicator, and you'll get our askSlim market condition indicator, all on those charts. And then you get, of course, our whole video library of getting up to about 300 videos right now. We put out 4 new videos every single week. So all of that you could have for half price, $64.50 for all of that for a month to try us out. Fantastic deal. Just write to me, slim@askSlim.com, and I'll send you that special link for that deal, and you'll try it all out. If you don't like it, just cancel it. And you'll learn a ton in that month. I'm sure of that. And also follow on Twitter at askSlim, follow us, and then subscribe to our YouTube channel. And see all the videos that we post up there also. So I appreciate your support, and become a member, and you'll really help me and the whole team out, so we can keep bringing you all this great information. All right, short-term view for the coming week. We're going to look at daily charts. We always take an accounting of how we did in the previous week. The last 2 weeks were spectacular. We were about 80%, and following cyclical patterns and price projections and all that. This week, not so good. We did not anticipate the geopolitical issues and the reaction to the tariffs. And so we had expected that the gold market would still languish and gold had this big uptick. So we didn't get that right. The levels we expected some tests to happen in silver, that was pretty close. The light crude market got way above the level that we expected it to trade as this face-off between Saudi and Iran is affecting it, and the threats out of Israel to Iran and John Bolton getting put in place. Those are all bullish for the energy market. I had mentioned during the week that I had read some commentary, and I think it's right, that there'll be a massive upside spike if Saudi and Iran do go to war. The dollar index, we thought it would get a pop and get up close to 91. No, I don't think that's likely. It got a pop and failed in a big way. The euro currency we still thought would continue on the downside. It made no upside ground really, but it then sets up for maybe more decline. I'll show you that in a moment. Bond market, we got right. Came up and got close to testing the numbers we were looking for. And the stock market, believe it or not, I'm not taking full credit on it because I did not get the magnitude of the decline correct this week. I thought they were going to go down right through the end of the week and then get a pop either on Friday or beginning of next week. That hasn't changed. I'll show you that right now. However, the magnitude of the decline that we were looking for was less for this week than actually we got, and it's now following more a bigger, longer term intermediate pattern than it was the shorter term pattern, which called for the decline, but we didn't see it falling 4 or 5% on the week. No. Let's take a look now as we look at the short term pattern in light crude. I'm going to put up this daily chart here. I'm going to go to a 2-year chart, because 2-year daily chart, because that aligns so much better, and put that up here for you to see. So here is the cycle analysis in light crude. You can see that big cycle on the bottom made up of 3 different parts. What happens is that when you get a declining or corrective period in here that aborts early, that is a bullish sign. It means that there's something that happened in there that is now pushing it up. And you could see in here it's on its high for the week right now, up again today and getting very near that level over there that we thought was going to be the high for the year. Pretty tough call for that to be the high for the year now, based on what we're seeing in the background. But we are going to call for it to stall this week, being that we don't think Saudi and Iran are going to war this week. So with the way this pattern looks is like we're going to roll over. We're going to call for it to fail near that old high of 66.66 and then come down and test this slim ribbon over here and then even do worse in the following week. So that's about a week and a half out that projects right over there. We're going to call for it to be a down week, but only minor. Note the momentum has turned up in there, so that's going to really prevent any significant declines in there. And when you get that upward momentum, then you have to watch the projection oscillator down here, which is overbought, and that then gives you a good sense for how much it pulls back when you get the projection oscillator to give it up. Anytime the projection oscillator approaches this bottom line over here, when you've got positive momentum, you can expect that it's going to continue to move on the upside as it did right over there. So that's my favorite analytical pair when you look at that, and it's right now it's not bad. So we're looking for just a minor pullback from that the high level at 66.66. Next thing we'll look at is the dollar DXY, and that's not it. What did I put in there? DXY. There we go. So here is the patterns we're looking for in here. Note we had that sort of a triangular formation right over there that it broke down under. So again, you can see the small patterns in there and the perfect alignments, the rallies and the sell-off periods right in here. And we talked about this flag being bullish and it was likely to move up, and this is that Fed day. It's almost unexplainable that on a day when they talk about higher rates that we would get a big downside break in the dollar unless there were other very significant factors going on. And this is overall not a great pattern when you look at this. We're essentially coming off of a big decline in the dollar and trading in this range that we're looking at right here. This coming week, we're looking for an upside move again in the dollar right there. So again, we don't think it's going anywhere. So we're going to look for small up. Momentum in the dollar, momentum in the euro, it's nothing. Look at the slim ribbon here. It's just absolutely trading with one moving average on top of the other. So we're just going to call that indecisive in there. I think that there's less chance of getting up to that 91 level that we had before. It's still a chance for that. It's more likely we're going to get a bounce up in here and we're going to get this small gain and then roll over again. So the dollar's missing opportunities to rally. You really got to say that it's giving some overall maybe negative relative strength to everything that we're looking at. Here's the euro currency. Now, we thought that the euro currency would be just choppy, maybe give up a little ground. Again, momentum is indecisive in there. We're looking for a down week. This is the opposite to what we're looking for in the dollar. We think that this is a pretty high probability we're going to get under this level over here and drop close to about 123. Look at the 89-day moving average starting to come up into that minor support zone. That's the area we expect it to come down and tag sometime in this week. This looks like 3 or 4 days in here to the downside, and maybe a week. And same thing for the dollar, maybe 3 or 4 days to the upside. The gold market /GC. This took off. Now we had put in here that it was very weak, and we commented last week that it was trading really poorly. So you could see this low right over here. It was a test of this low right over here and all of these support levels coming in there. So there's your cycle low support. We were worried it was going to violate it right there and then come down and test this level here. Well, it didn't do that. It held it, and then when this news came out, the dollar broke so significantly, then the buyers started to come into the gold market. You could see right there, and it's trading up near the highs for the week. So what we expect to get up to happen now is that gold gets up here and tests this 1357 to 1370 levels right up there, and then rolls over. Here's your dotted line over there, which is the fib projection that we're looking at. And then after that, it opens up another window for another rally. So pop up here into that resistance zone, come down over here. This should be a buying opportunity for traders, and then pick up over here. We're just looking for a choppy period right now where it fails in this area up here and then pulls back right over here. We're going to call this a small down week. In other words, getting up a little bit and then pulling back right there. And that lines up with the dollar that we think is going to rally for about a week. So the inverse correlation says that the gold market probably pulls back by a little bit. Silver last week we said was going to come down and test the area around 1603. It actually came down over here and got down to about 1609 and then ticked up. So it's avoided a violation right there. You could say it had a little violation during the day, but when it leaves a tail, we don't really count those. And then it started to tick up. So what do we see in silver now? Well, we see an upside, potential test of this 1670, but we think it's a down week also in here. So you see it rejected that 89-day moving average right there and then started to roll over. So we're going to look for a down week in here. Now, interesting. Notice the slim ribbon in here in the silver market. Our momentum in here turned negative over here way back on February 7th, and every rally has failed since then, as it still remains in negative momentum. I'm going back to gold for 1 second so that you could see right in here, and that is the momentum today has now edged to the positive side. So that shows you the difference and how much stronger gold is than silver. Bond market /ZN, we're going to look at first. Too many forward slashes. There it is. And so this is following the small cycle patterns spot on. And that says that this little rally right over here is going to fail. Last week we said that we thought it would get up to around 121. 121. It got up to this level right over here, which was very close to the 121 number, and then you can see it's starting to stall a little bit in the minor resistance zone. We think the bonds are going to pull back a little bit this week, but it doesn't look like it'll last very long on the downside. So we're just going to look for a little pullback and then another rally. The area near 120 on the 10-year, we think for traders is a buy zone, because we think we're going to get another pop to the upside in there. But this is only for aggressive traders. The overall pattern is just not very good. Same thing for the 30-year. Now, we thought the 30-year would get up over here to around 145.24 and then fail. It got up right over here to 145.18 and then started to fail. So that was pretty correct. And now you can see in here, there's a inverted head and shoulders in there that it's trying to break out from, but it can't even do that. We're going to look for a little pullback right over here. We think that the little dip might get you down close to 144 area, and then we think that for aggressive traders, that would probably be an area to buy it. If the stock market got a bounce and then started to move up again. So that would be probably I would say a 3 to 5 day long side trade if you were able to make it in there. So again, right around the 144 number, a little bit lower. See the slim ribbon coming across here? It would be just below that slim ribbon that it would come in. I don't have a support in there because of the anchor. I don't have a good anchor point because of this dip over here and this mid-cycle dip over here. So that's why I don't have a support zone put in there. I'm just estimating it based on the cycle rhythms that if you were an aggressive trader, you could buy this little dip and then look for this rally over here. Stock market is likely to give you some pretty wide swings, and if you get another big down day in there, you'll probably get paid off in the bond market again, especially if China says they're not going to stop buying our treasuries. It might even be suicide for them to do so. All right, so the last thing we're going to look at here is the S&P 500, the stock market. We're going to expand it a little bit. I want to show you something else. S&P 500, we said, was going to have a down week, and we thought that it would decline to 27.22. It got much lower than that. And the NASDAQ, we said 69.14. It got much lower than that. And then we thought that if there was a rebound, that would be either today on Friday or it would be early part of next week. That analysis holds up really well, not price-wise, but pattern-wise, as we switch over here and look at the S&P 500, which I think is probably making is probably having a capitulation here at the end of the day on Friday. We're down to our last few minutes of the day in here, and you can see that the selling is coming in pretty hard as we're late in the day down in the S&P 40 points. So just tried to rally after the president signed the spending bill, and then afterwards it fell something like 40 points. So the what you can see in here is what we had thought before. This pattern in here coming down. This is a 14-day cycle right over here. This is day 14 right over here. Now 14 is short, especially short for a declining market. It's for rallying markets, you tend to shorten because the buyers are aggressive. When the sellers are aggressive, this tends to lengthen out. So that's why I wasn't sure if we'd get a bottom here or get a bottom early part of the week. What we're looking at, and now this resistance zone declining has declined since So it's not exactly positioned right. I believe we're going to get a bounce here in the coming week, and that bounce is likely to get into the bottom of this resistance zone. The rally could last 8 days. It could last 3 days. It's really hard to tell. I don't think it's going to last more than 8 days, but you could see this rally here was 8 days, and then it rolled over pretty significantly. Once you get the bottom here, and this target number here is at about 2580-ish or so, right there at that 78% fib, then you get the rally in here, and then you roll over again, I think, for another slam after that. So we're looking for a bottom to form here early part of the week, and then fail. Momentum here 2 days ago has turned negative in the S&P 500. You can see that. We're going to call for a choppy week coming up, where it bounces early and then is not able to hold bounces. Maybe you get one big relief up day in there, but overall we expect it to be pretty choppy. The NASDAQ pattern in here, similar. You can see this has this cycle support breakdown right here. We have that on the S&P 500. I should have mentioned that to you. SPX. Let's just go back there because I don't want to skip that important point. This low over here got broken. That what that says is that our intermediate pattern on the downside is now proven. Would raise the odds of that intermediate declining phase. So we have this breakdown that happened late yesterday or confirmed here today on Friday, and that says that the correction that we thought would resume into this late springtime is here. The NASDAQ now again back to that. The same thing of the breakdown right over here. You could see this getting a little below that low. Again, we're looking for a low here in the next couple of days and a bounce into this sell zone. That sell zone is not placed in the right place because of this decline late in the day. Our level 4 members will get an update on that this weekend, and then have those numbers in place after the close here on Friday. The Russell RUT, you can see here it's only at the 78.6. In other words, it didn't break that support level yet. The Russell's been the strongest index, but I got to tell you, I think it's going to become the weakest index as it's starting to get slammed right now, and those very, very overpriced second and third tier stocks are likely to get hit very hard at some point in here. So this, you can see again, same thing, bottom in the next couple days, and then get a rally into that resistance zone and then fall off very, very sharply. There's one more thing I want to show you before we wrap up this show. I mentioned the askSlim market condition indicator. This is an unusual indicator in that it's built on multiple time frames. What it does is gives you I'll tell you that it's built from weekly down to intraday indicators. And the reason that we do that is that when you get a market that is strong and rallying, just as an example, and then it starts to fall, if the longer term internals are really strong, then the decline that you get as a corrective decline will not allow it to break below what we call the swing zone. Now, here is looking at all 4 indicators right in here, and I'll talk a little bit more about that. So when I look at the S&P 500 right over here, here's your swing zone, 25 to minus 25. That is a key thing here. So when the market was strong and you got a rally, you got a break or correction here into the swing zone, when it moves back out of the swing zone, it tells you that the internals are very strong and that the market's still actually in good shape. But then when your next decline comes and it moves through the swing zone and turns red, it tells you that there is damage done to the longer term and that this is something real going on the downside. We now have the S&P 500 plunging through the swing zone, giving you this negative 74 reading. We have the Dow Jones Industrial Average having been the first one that did that, and actually got up to the swing zone and then broke right over here, which tells you this is really negative right over there. And now you have the Russell starting to move down through the swing zone also. Only the NASDAQ hasn't done it yet, and that is not going to, I doubt a lot that it's going to be able to avoid. What we're getting in here is the messages that the internal situation in the stock market has deteriorated very significantly. You could actually set up these grids using, 4 different stocks in a group, or comparing other symbols that you want to compare against each other, or you just look at each one individually. We put the market condition indicator right on the charts that we share, and it's I think very helpful to our members. They get the level 4 members get the script for that and the option bias indicator. So really a negative message that we're getting for the stock market right now when I look at that. It tells me that if the internals had held up in that first break that we had a couple of months ago, that then this decline that we're getting in right here would be showing us that it wasn't able to break down through that key swing zone. But now they're all breaking down through it, and it says to me that the problems are big and that the stock market is likely to continue to try to rally and fail and continue to trace its way down until this decline or this correction is over with. And again, watch our big picture analysis to get a sense for how we projected that out and where that's coming from. Our longer term monthly cycles and weekly cycles tell the story. That's it for Market Week. I hope that was a ton of informative information for you. I didn't overload you with too much. Please let me know if you liked it. Don't forget to follow us on Twitter and also become a YouTube subscriber and become a member at askSlim, and do it for one of those premium levels and sign up for that special deal on the workshop and all of that. I hope you have a great week. I want you to be careful because it is so crazy out there. And we're always wishing you great trading.